All right, here we are, San Diego Market Matters. I'm Karl Kyler, your San Diego realtor, and it's our monthly check-in. We got the February numbers in. We're gonna go over those in this episode of San Diego Market Matters, which is what we're gonna do at the beginning of every month. We're gonna review last month's numbers. So without further ado, let's go ahead and jump into these so you know exactly how things worked out last month for us. Now, overall, we had an 11.1% decrease in the number of homes sold, a 2.7 increase in the median sales price, and over 35% increase in number of homes on the market. Now that's overall, so that's blending both the attached and detached sectors together, which I hate doing, but it gives you a snapshot. So let's dive into the actual detached section to start with. To start off, we had 1,608 new detached listings come to market, which is about a 5.5% increase from this time last year. Now, what's kind of interesting is in January, we had just over 1,800 new listings come to market. And for us to see February's numbers down in comparison to January's, that's kind of peculiar. Typically, we see more inventory start to hit the market in February, March, and April as we get deeper into spring and closer to summer. All right, now let's look at pending sales. We had 1,201 homes go into escrow. That means they accepted an offer and came off the market. This is about the same as what we saw last year. This is interesting and kind of good news. So despite the cost of things still going up in general, not just housing, but in general, despite the fact that everything's still going up in cost, rates didn't really change much last month. We were still around 7%. Maybe the last week or so we got below 6%, but it wasn't anything significant. Despite that, we're still seeing the same number of buyers consume properties on the market. Now, for closed sales, we had 990, which is just over 8% less than what we saw in February of last year. At the same time, in January, we had just over 900. Now we're close to 1,000. So we're still starting, what this is telling us is that more people are buying homes as we're getting closer or like farther away from winter. So this is a good sign that traction is picking up, even though it is less than what we saw last year. If we look at year to date, we have 1,927 closed for year to date in 2025. And that's just shy of 2% less than what we saw last year. All things considered, very, very reasonable. Nothing shocking in that context there. Now for median sales price and average sales price for the detached sector, we have a just barely shy of a 6% increase in the median sales price, and the average sales price ticked up 1.1%. These are good signs that we still have strong, healthy market where a lot of people are saying, oh, well, inventory is increasing and there's price cuts and all these things. A lot of those price cuts is just people overpricing, right? So once they bring their price down, you can still see price growth even though there's price cuts. It means people were just pricing too outrageously to begin with. The next metric I want to point out is days on market. We're at 36 days, which is 16% higher than it was last year. But what's kind of cool is in January, it reported at 44 days. So between 1 month, our days on market dropped almost 10 days. This is consistent with typical trends as we get farther out of winter and deeper or closer to spring. I feel like it's spring for 6 months out of the year here. As we get closer to spring or deeper into spring, you're gonna see more activity. You're gonna see more closings. You're gonna see that days on market slowly trickle down. As for our inventory of homes, we had 2,507 homes, up almost 28% from this time last year. And to be honest, it's only a slight increase from what we saw in January. January was in the 2,300 range. Not concerning to see a 200 home increase from 1 month to the next, again, as we're exiting and getting farther away from the winter season. Bottom line, something to keep in mind, 2,500 detached homes on the market. That's not that many. Even though it's a 27.5% increase from this time last year, that's not a lot of homes to pick from. Here in San Diego, we're seeing an increase. It's significant, but our levels were so low as it was. There's an economist, Logan Motoshami from Housing Wire, that talks about this very point. He says that when you have super like record-setting lows, the slightest increase can be significant, and that's really what we're experiencing here in San Diego. So to summarize or to recap or just to emphasize, even though we're up almost 28% from this time last year in inventory in the detached sector, that doesn't mean there's a lot of volume out there. you're still gonna run into some scenarios where there's gonna be multiple offers. A perfect example of this is I had a client that I just met at an open house. They previewed a home for 1.7 million. It's been on the market for just a little bit. They wanted to submit an offer and there were already two other offers. One was all cash, slightly below asking, and the other one was a big down payment, but they had a 90-day escrow because they were moving from Washington down here to San Diego. So there still are multiple offer scenarios out there when the home is priced right. All right, now let's jump into the attached section of the market and see how these numbers have panned out and how they differ from the detached sector. So for new listings, we had 1,047 new listings. That's up 11.5% from this time last year. And this is slightly less than what we saw last month. Last month, we had almost 1,200 new homes come to market in January, and then we have less come this month. So that's kind of weird. Typically, we should see more homes come to market in February rather than in January. For pending home sales, we had 681 go into pending, which is almost 2.5% less than what we did last year. At the same time, this is an improvement from what we did in January, where it was around 630 homes. So our attached sector number of homes that are going into escrow, it's increasing a little bit. For closed sales, we had a 15.3% decrease from this time last year or year over year. Now, what's interesting is in the month of January, we saw a 4.3% decrease, but then in February, we saw 15.3% decrease. We closed out 587 homes in total in the attached sector. What this is telling me is that attached sector tends to be a lot of first-time buyers. So either the price points in the attached sector in general are either too high and affordability is just being stretched way too far for first-time buyers, or more and more first-time buyers are electing to hold out, stash more cash, and get into a detached home. And I'll tell you this, I think it's a combination of both. I think the affordability is being pressed for a lot of first-time buyers getting into the condo market, especially with how outrageous HOA fees are now. In addition, there are a lot of families, especially first-time buyers that are deep into their 30s with really well-established careers. They're holding out for detached homes. So they're saving up a little bit of money. They're waiting for those rates to come down at the same time while they're saving, and they're going to pounce on a detached home when they finally get to that financial position that they can do so. Here's something kind of interesting. The median sales price went up 3.1%. The average sales price came down 2.4%. Being the fact that there's that disparity where one's up and one's down, and they're pretty minimal, I would kind of just wash out these metrics, to be honest, and say we're probably just flat. Now for days on market, we are up 32.3% from February of last year. But interestingly, if we look at January's number, January was 46 days where February is 41. So buyers are picking up properties a little bit sooner. I would bet you that in March, this number will be probably sub 40. Now for the whole inventory of attached homes on market, townhomes, twin homes, apartments, we have 1,812. That's up 47% from this time last year, which only stresses how few of homes we had on market at this time last year. You got to hear it, for 1,800 homes. That's practically nothing. Even though it's up 47%, that is still not much for buyers to look at. You're probably looking, if you're a buyer that's looking at an attached home, you really probably only have 3, maybe 5 homes to look at a time. And then you're probably sitting for probably 2 weeks before the inventory turns over and you have another 3 to 5 homes to look at that you hadn't already looked at, or that hadn't kept like coming up in your feed over and over and over because they were just sitting on the market. Now, if we compare February to January, we did see an increase in the number of homes, probably about 150 to 175. That's expected. We're moving into the spring. It's probably going to do the same thing in March. But at the same time, we should, and I'm hoping we should see more pending sales at -2.4. Hopefully we'll have a positive number show up in the month of March. Okay, now I want to show you this report here where it's the inventory of homes kind of side by side. So I talked about the detached sector and then I talked about the attached sector, but this is going to show them to you side by side. It's going to look at 23, 24, and 25. So if you look at 2025, we have 2,507 homes in detached and 1,812 in attached. that's barely over 4,300 total homes. So our inventory levels, even though they're up a significant amount, are still at deathly low rates. And you can see it on this historical inventory report of homes for sale by month that goes all the way back to 2013. From 2015 all the way up to COVID, we were sitting around 10,000 homes on the market, which is actually really, really low. For a flat market for us, we need to typically be between like 14 and 18,000 homes on the market. And that is a variable that adjusts a little bit based on interest rates. So at our current interest rates, our inventory with a flat market will probably need to be back to between 8 and 10,000 homes on market before we start to see things just be completely stagnant. Some that may go a little over asking, some that might go under asking. But as long as we have this really, really low inventory, we're still operating at super low levels historically. Now, if this trend continues for the rest of the year, then we're gonna have some significant gain in inventory overall, and that's when you'll start seeing prices adjust in the favor of buyers. All right, now here's a total market overview. Total new listings, we had 2,655, pending sales, almost 1,900, closed almost 1,600, our median sales and our average sales price. Okay, so this is this is total market overview. So this is attached and detached. I don't like lumping these together, but just to give you a broad idea of what San Diego's doing in total, both median, average sales price, they both increase. Days on market, 38 days, up 23% almost from this time last year. And homes for sale, like I said, 4,319, just over 4,300. Super, super low levels, despite being up 35% from this time last year. All right, that's a wrap. If you have any thoughts, questions, or concerns, don't hesitate to reach out. I'm gonna post a video right here on the 4 reasons why the housing market is not going to crash anytime soon. And I'll also post right here a hack. If you're a renter, you wanna check out this video. Here's how you can use your rent payments to help you maybe pay for your next vacation. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.